All right. Good morning, everybody. Happy Tuesday. Welcome to the morning show here on Stock Market TV. It's the best morning show in finance. I am Spencer Israel. I've got JC Parets. I've got Steve Strazza. I've got chart master Alfonso whipping up charts backstage as we speak. What's up this morning? What's up, chat? What's up, DK, Justin, Ravi, 92 Fish Gut? Good morning, everyone. We got a lot to discuss. We got some charts. We got some bubble charts too. We love ourselves. We love a good bubble chart. We got some earnings. We got some sentiment discussions. Yeah, that's the show. Ed Clissold is today's guest from Ned Davis Research. Will be on in about 20 minutes. We'll have Kimmy, as always, and Patrick on after that. Patrick doesn't know what that is. So that's the drill. You know what to do. Hit that like button. Let's roll. Where's my intro?
Brettanomyces, Spencer Israel. That is the word of the day. Brettanomyces, Brett for short.
Can you use it in a sentence, please?
The aroma and some of the flavors in a left bank Bordeaux really bring out that Brettanomyces.
Okay.
It's the flaws in the winemaking process that really give it character, quote unquote flaws. You know, you're never going to get that in some of the more Germanic influenced wines because they're like so by the book, like so clean. There's no flaw to those wines. It's like a joke, right? Like it's like a joke because it's true. But as you start going south, especially in Italy, the shit show in Italy, they're just like, a little bit of this, a little bit of that. Hey, there you go, right? So you got a lot of flaws, which a lot of wine drinkers consider that a good thing, myself included. And those flaws and that kind of like funky, mushroomy, kind of barnyard, it's called Brettanomyces. And when I have my ribeye and I lay out that Gorgonzola butter herb on top, that funk from that Gorgonzola goes nice with a wine that has good Brett. So Brettanomyces, word of the day.
Okay.
You done showing off now? You want to talk about the market?
Spencer and I were just talking about it,
I heard you guys.
Back in the old green room.
Isn't there a word for the kind of shoot from the hip style of the Italian wines too?
Improvising.
Yeah, it's not really.
There's not.
Shit show.
Okay.
As you start going south, the south of France, Spain, Italy, it's much different than those clean wines of northern France and Germany and Austria and stuff like that.
It's cool how a little bit of the culture comes out into the wine.
100%, dude. 100%. They meet at the Loire because the Loire River cuts France in half. So the southern side is the more Latin influence. The northern side, north of the Loire, is that Germanic influence, and it meets right in the middle. So if you really want to get true French culture, hang out around the Loire.
I think one hole got it. It's called Fugazi.
That's it.
Fugazi.
All right.
You say we talk about the markets, my friends.
Yeah. Do we have things to discuss? I think we probably do, right?
We usually do. We usually do around these parks.
We do.
All right.
We do.
The unsung hero, Strazza. The unsung hero. They forgot about healthcare. Yourself included, I might add.
I was thinking of you yesterday. Big sticks in healthcare yesterday.
I'm just saying, it's kind of a big deal. Can we just, come on, guys. Come on. This has been such a monster. And all it took was a couple of years of a sideways range for people to just completely forget about it. No?
It's still a mess, though.
It's 21% of the Dow Jones Industrial Average.
Great.
13% of the S&P 500. So if you're one of those people, who think that the indexes are going to make new highs, do you think that's going to happen without these fellas right here? I'm thinking no.
It could.
No.
It could.
It could. Is that the bet you're going to make? That markets are going to break out to new all-time highs and this one's going to break down? Is that the bet you make? No.
No, I don't think healthcare stocks are all that important though.
Well, did you take third grade math or did you skip that?
So you're all right. So wait, you're saying they're important to the Dow Jones specifically though?
They're the second largest component of the S&P. Are you not entertained?
All right. Okay, good. Great.
Why don't we look at slide 2 here? Looking at sector performance over the last decade. Technology, no surprise, at the top of 500%. I included the indexes there, the S&P and the Qs, just to kind of put some perspective in there. Qs up 400%, sure. Consumer discretionary and healthcare coming in right behind tech at a 200% return over the last 10 years. How do you feel about that? Not impressed?
So they're number 2 and 3 behind tech.
I mean, they're tied for 2 for all intents and purposes with discretionary, which is a lot of Amazon and Tesla, by the way. Kind of a big deal. Healthcare, keeping up just fine, thank you.
How? Oh, okay. So chart crime here a little bit. XLC should not be included, right?
Because it hasn't been there for that long.
Yeah, I was just thinking to myself, how come communications underperformed so bad? That can't be right, but it's because that ETF just came around like 18 or 19, I think.
What is it? It's IXC is the index, right?
Isn't that world though? I think it's world. Not that it matters. It's still
no. It's not world. The XLC is a sector ETF that follows an index. The index is IXC, depending on your software, right? But it's a good point. It's a good point there. Nevertheless, you're right, because the XLC started right there. You could see that purple line right there, right in 2000. What was that? Late 18. Yeah. Okay. Still though, not the point. Still.
No, sorry.
Huge returns. No.
I'm surprised to see healthcare that high up on the list here.
Are you?
Yeah, I am.
I think most investors will be because of your recency bias.
Yeah.
Why don't we show why Strazza has this recency bias in the next slide?
You just don't think of them as high beta stocks, right? That are going to give you that kind of alpha over longer.
Do you need to consider them high beta stocks?
Huh?
Do they need to be high beta stocks for them to do well?
I would prefer them to be.
They've the beta is very low beta name. Here we're looking at the largest component of the world's most important stock market index. 10% of the Dow Jones Industrial Average right here, folks. United Healthcare.
I mean, this chart looks great right now. This chart looks fantastic.
Got it. So healthcare doesn't look great, but its largest component and most important stock does look great. Is that what you're saying?
So why not just buy UNH? Why do you keep talking about XLV? Find me another top 5, top 10 holding that looks.
Guys, I love you, bro, but they look exactly the same.
Why not just buy UNH though?
Oh, I'm not saying not to. Nobody's saying that. You're putting words in my mouth. Let me spit them back out. Right? Nobody's saying don't buy United Healthcare. In fact, to your point, looks great. But what I'm saying is, if UNH is breaking out of this base, what does that mean for healthcare as a group? What does that mean for the indexes?
Also, a solid beat for J&J here this morning. That won't hurt this theme either, right?
Did they beat or did the analysts miss?
We're saying the same thing.
Are we?
Yeah.
I'm not trying to get in front of this train, and I got another one here for you there. Slide 4, Mr. Spencer, show them. I got a little fancy here with some Fibonacci extensions. How do you feel about that, Strazza? Is it a little too early for this? A little too much sex appeal this early in the morning?
This is a lot of lines for me at 8:30 in the morning.
No, but you see how I cleaned it up a little bit though?
I like that. Did you white it out? How'd you do that? You whited it out?
Right? Oh, the kid's got skills, Strazza. Yeah. Come on. You know me, baby. Come on.
Who knew JC could use Microsoft Paint so well?
I've been using it a long time. A little fibbing in the morning. Some people haven't even had their coffee yet. JC's already fibbing.
So you're You are proving me wrong with examples, I guess. So I'm going to flip through my healthcare list here right now.
Wow, Strazza is admitting that he is wrong. Is that a first time for here in the stock market TV? Spencer, are you keeping track of this?
Listen,
Big deal.
I mean, I don't have a counter, if that's what you're wondering. I can start one.
Well, there hasn't been much to count, so now you can start at 1. Strazza admitting he was wrong. Wow.
All right.
Didn't see that coming.
Let's talk about the problem with XLV, though. How much
Hold on, can we get back to Amgen? You're just skipping over this. Too many lines.
Fine.
Put it back up. You're not buying that breakout?
Yeah, no, you're right. Looks good. Not many biotechs look like this right now either.
I would argue no biotech looks like this.
Yeah, it's the pharma stocks look like that, but they're not quite biotechs, right?
All I'm saying is when you look at some of the largest components, we don't need to look at Eli Lilly again for the 297th time. We all know it's going from the upper left from the lower left to the upper right. We know.
Mm-hmm.
And that's the second largest component after UNH, by the way. And it's also making new all-time highs.
Second largest?
Second largest is Eli Lilly, yep.
And then Novo?
It goes. Novo Nordisk is not in the index.
International. That's right. Yeah.
It's international. But we have international indexes in other sectors. I'm surprised actually that Novo. What is the market cap of Novo Nordisk? Let's see. Holy crap, it's 450 billion. Man, it's bigger than I thought.
Eli Lilly is a $600 billion stock. These companies got way too big. It's a problem. That's why I don't think you want to own XLV.
Well, fine, but if you can't figure out whether you want to own Eli Lilly and you can't figure out if you want to own UNH because UNH hasn't broken out yet, but Eli Lilly's is already taken off, and Amgen's getting ready, XLV gets you into all of them. No,
I don't know how I feel about it.
Listen, you're not every other investor.
Yeah.
Some investors around the world don't want to buy the stock; they'd rather be in the ETF. Strazza, high beta junkie over here. He's not entertained by these exchange traded funds, and he wants to be in the common. Probably wants to be in the call options of the common if you really want to go there. So then, of course, you don't want to own the ETF. But there's nothing wrong with owning the ETF. It depends on what you're trying to do.
I like ETFs for certain groups.
And healthcare, you just don't.
No, because I think you could pick the best ones in healthcare. Something like uranium or gold miners. I don't want to play the game of picking the right one in a group like that, right? So I do like the idea of buying the basket. I don't feel that way for something like healthcare.
All right. Well, just wanted to present the facts. All of you out there, do as you wish. I think Strazza's sentiment prior to admitting him being wrong speaks to the sentiment of many that on the street. We have friends here all the time. I can't wait to ask Ed Clissold about what he thinks about healthcare. But we have some of the smartest folks on the planet here every single day, and none of them are talking about healthcare.
It's a good point. You're not wrong.
I mean, since we're talking about healthcare, you want to talk about the bellwether of healthcare? Johnson & Johnson?
United Health?
Johnson & Johnson?
Are they
Johnson & Johnson is not the bellwether of healthcare.
They're a stable stock.
I would argue the bellwether of healthcare is United Health.
Whatever. A bellwether. Yes, they are. They're a bellwether. Maybe
how many years in a row? I agree with you, Spencer. I'm breaking balls. But Strazza, how many years in a row has Johnson & Johnson raised their dividends?
Forever. There it is.
Okay.
Spencer just wants to talk about J&J because it's from New Jersey.
New Brunswick based. That's right.
That's it, baby. Shout out New Jersey.
But although every healthcare company is based in either New Jersey or Boston, so that's not exactly saying a whole lot.
Is that true? Really?
Basically. No, biotech is in Boston. Yeah. Healthcare and pharma is in New Jersey.
Is that true? I didn't know that.
Yeah.
Fun Spencer, fact. Do you think Johnson & Johnson is more of a staple than a healthcare stock?
No, because they just spun off that whole unit. So definitely not.
Like their Band-Aids and all that stuff?
They spun it off? To who? When?
There was the IPO like 2 months ago. It's got a weird name. It starts with a K. Help me out, chat. What is it? Kenvu? Kenvu? Something like that.
So where's the baby powder now? Yeah, KVUE. Who owns the baby powder?
They do.
Baby powder isn't a thing. I thought that was the whole point. Is the stop making the baby powder?
No, they still make the baby powder.
Do they?
How could they stop making the baby powder?
Strazza loves the baby powder living in the US. He's a sweater.
Look at this stock chart though.
J&J?
KVUE. Oh my god. KVUE. Guys.
Yeah.
This is terrible.
I'm pretty sure that's like the staples, or maybe that's like the Tylenol and stuff. I'm not here. You know, I don't even.
What a disaster! Remember. Are you sure this is the
Strazza? Overlay it with staples.
Wow.
Overlay it with staples. Is it really that much of a disaster?
I don't know.
Here.
Can you do it?
Look
at these pharma ETFs.
All right, so Kenvu is Band-Aid, Benadryl. Oh, Kenvu is the talcum. It's Johnson's baby. It's Neutrogena, Tylenol. That's all like Kenvu stuff. So, to answer the original question, Johnson & Johnson, I don't know. They're still probably both a staple in the healthcare, but I don't know.
They spun off Tylenol?
I can confirm that it is not a consumer staple, but I will say, take a look at slide 1 here for Kenvu, so you can see that it's not Kenvu's fault that the sector that it's in sucks. Look at that. Take a look at slide 1. So is it really Kenvu's fault, Strazza? Or is it a function of the space?
Yeah. Wow.
You know what I'm saying?
Low volatility, they say. Right.
Anyway, Johnson & Johnson did report earnings this morning, and they raised their guidance along with that. The stock is, I think, up a smidgen. It's probably mostly flat. Doesn't typically move a whole lot on their reports, but they came in above estimates on the top and the bottom line, and the guidance raised, like I said. And if you're wondering, here's a comment from the CFO. They do not have the scientific expertise to get into obesity drug development at the moment. So, sorry if you were hoping for.
Wait, seriously?
They said that's what from the CFO. So,
Chris Brown asking, saying Eli Lilly's a bellwether for healthcare. I'd argue it's a bellwether for drugs, Chris. You know what I'm saying? Not so much healthcare as it is for drugs.
They're pharma.
Yeah.
Drug manufacturers. Eli Lilly, beast mode.
Can
we bring on Ed Clissold instead of us three knuckleheads talking about these spin-offs and healthcare stuff?
Yeah, Johnson's relevant. We have a chart of that too, don't we? I thought we did.
Yeah. I want to go back to healthcare.
We're talking about healthcare. Why not talk about Johnson & Johnson? They literally reported 2 hours ago.
All right, give us the numbers.
I did. They beat and they raised.
Up 2%. You know, I was thinking this morning, didn't we talk about on here how these bank stocks were barely going to move? Did you see Bank of America's reaction?
We can talk about that a little bit later. Yeah, I know. I was going to talk to you about that because
they barely move these things.
Yeah, I know. Although, you know, a lot of health to maturity losses. Okay, let's bring on Ed Clissold. He's here. He's got charts, and let's go.
Do it. Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Ed, what's up, my man?
Oh, just living the dream down here in Florida. It's under 60 degrees, so I had to put on the pullover. It's a tough life.
Bring out the leather gloves.
Yeah, exactly. That's why I love all the recent people who moved down here because they bring out their expensive leather coats because it's the only time they can wear it. So.
Where in Florida are you, Ed?
Sarasota, south of Tampa. Yeah.
Sure. We were just talking to Mike Lee, who's down there. You know Mike Lee?
I know him. I didn't know he was a Florida guy too. Oh, okay.
Yeah, he's down in Sarasota, and he was just on the show last week. Fairfield University alumni. Him and I used to, we used to party back in the day. He's a year older than me. He played rugby, so you can imagine.
Okay, so work hard, play hard kind of guy, huh?
Yeah, I think he's working harder than playing hard. I think his playing hard days are over from back in the day. But
Well,
yeah.
it's good for him. Good for him.
Yeah, exactly. We all grow up at some point, Ed.
Well,
Most
we
of us,
should.
anyway.
We should. Yeah.
We were actually just talking about Ned Davis. By the way, Ed Clissold, one of my favorite guests for sure. Always bringing the heat. We were talking about Ned Davis yesterday, actually, with John Kovalos, and we were talking about how Ned Davis does a great job of Ned Davis research does a great job of sort of categorizing a bear market with both price change and time. Can you talk about that? And does last October fit that category? Can you go over that before we dive into the charts?
Yeah. So if you just use the rule of thumb, 20%, which works in a lot of cases, but when you get in these violent bear markets, there's all these 20% rallies. And so if you're going to do good research historically, you can't just pick and choose which ones you want arbitrarily. So our definition is a combination of time and price. So you can be a bigger decline, like 30% over 50 days, or a smaller decline, 13% over 150 days. So
How
either
many
one
of those 30% declines in 50 days? You got the 87 crash.
COVID.
COVID too counts.
Yeah,
Oh.
COVID counts. Yeah, it's very few. Then actually the initial decline in 29 was, and then there's actually a rally, and then you get the longer bear market after that. But most of them actually wind up meeting both criteria. So it's really, and if you look at the 20% changes, like a lot of them fit too. This is just taking care of the outliers that really don't make sense. But yeah, so last year did meet our criteria for a bear market.
October 12th.
Yeah. So actually,
bear market low.
We use the Dow, and it was so September 30th because you get more history with the Dow. But again, usually the differences in dates are same day, or in this case, it's 2 weeks later. But yeah, so that was a bear market, and then we're in a bull market from here. So
how do you define when a new bull is underway?
Yeah, it's the opposite, right? So you have to have a 30% rally over 50 days or 13% over 150. So it met the criteria, earlier. I guess is like some point in the second quarter is when that criteria is met. So that's where like some people get kind of freaked out. They say, "Oh, now you're telling me it's a bull market." No. Our research, our indicators tell us when we're in a bull, when we're not. This is just for historical purposes to tell you, give you the frame of reference.
And so you're confident that we're in the midst of what is now month 13 of a bull market?
Yeah, look, you don't know until after the fact. We peaked in July 31st for both the Dow and the S&P. So yeah, we'll see. But no, I think we're pretty comfortable with the idea that it's just an ongoing bull market. That the pullback we've gotten in the third quarter, was very typical for a seasonally for the time of the year you're in. Also, in years when we have a really strong start to the year, so we're up like 19.5% through July. So when you're up at least 10% through July and you're down in August, that's happened 14 times. The last 4 months of the year, you're up 14 out of 14 cases by an average of 10%. So pretty good track record. Again, there could be a first time for anything, but the technical support it. But yeah, so this chart is a cycle composite. So it's combining the 1 year cycle, just a pattern, the S&P over the year. Then the 4 year cycle, so in this case, it's pre-election years because there's a lot of government stimulus that travels along that 4 year cycle, and then years ending in 3 for the 10-year cycle. And it pointed to a pretty strong start to the year, a peak in July, and now kind of choppy seasonal weakness, and then a year-end rally. So we're through most of the seasonal weakness. We don't get too cute with this sort of stuff, but the rally starts in a few more weeks, according to this.
And you get people, it's like, well, all of that is priced in because everybody knows that we're getting a year-end rally. Well, what happened last year? Everybody knew we were getting that, you buy that midterm election, right? And you get that strength. Was that priced in too? Clearly it was not. So why is this time going to be?
Exactly. I love that. Actually, this is a perfect example. So, Bloomberg sort of surveys strategists for their year-end target. And so a few years ago, I was asked to be part of the group. So it's kind of an ego boost, right? Be part of that group.
Well deserved, Dad.
Yeah,
Well deserved.
Appreciate that. But man, it is an exercise in watching group psychology at work. So, strategists are people. It doesn't always seem that way, but we're actually human beings. And we're subject to the whims of our emotions like anybody else. And so what happens is they email us once a month, say, hey, we're going to update the numbers in a week. So give us your new target. So if you see like a flurry of strategists updating their numbers, it's because Bloomberg told them that they need to do their job. And then if somebody like Mike Wilson, who's great at Morgan Stanley, or David Costin at Goldman, if they move the next month, you'll see the herd just go along with them. And so what happened last year, toward the end of the year, the consensus was weak first half because they're going to recession, then a rebound. And it was the first time ever Bloomberg survey had a median estimate for the S&P for the next year that was lower than where the S&P was then. So there's your sentiment indicator right there.
Sure.
People were paid to be bullish, were bearish. And what happened? Of course, the opposite.
Yeah.
So yeah.
Totally.
This stuff works.
Classic. And that short interest coming into the year through the roof, and a lot of these names, I mean, just the offside positioning across the board between the sell side, economists, short sellers. I mean, the writing was on the wall. I mean, we were here talking about it, obviously.
Throw up chart 2 here. What's behind this, Ed? Speaking of sentiment.
Yeah.
Sentiment composite.
Yeah. So there's about 30 different indicators in this one, and it's the things that you would suspect: the VIX index, put call ratios, surveys of individual institutional investors. So we take all the data, normalize it, ranges from 0 to 100. So 100 means all the sentiment indicators are optimistic, and 0 means they're all pessimistic. And like most sentiment indicators, they're contrarian, right? So there's optimism, the market does poorly. So you can see in the bottom section of the chart, the market returns when you've been in those zones. So when there's optimism, the market struggle. When there's pessimism, the market's done pretty well. And so pessimism coming into the year, got back to optimism by the summer. We've pulled back. And actually, I view this as pretty constructive that in a run-of-the-mill seasonal pullback, we got into the pessimism zone.
Do we call this a sentiment reset?
Yeah, I think it's a pretty good description of it. 'Cause I don't think the fundamentals and the macro have changed markedly over the last few months. I mean, maybe some people have moved their expectations of Fed policy, but otherwise, this is just the market had a really good run. There's some profit taking, so a little bit of nervousness, and now we're shaking the weak buyers out of the market.
It seems to me like these a lot of these people are just surprised that the market is weak and messy during a time that it's supposed to be weak and messy, to the point where if it wasn't weak and messy, that would actually be very unusual.
Yeah, in fact, I'd be nervous if there's a little bit of choppiness in the market, and this was showing optimism. That would tell me that a lot of people have really bought into the idea that we're in a strong bull market, and that's usually how bull markets die. Through excessive exuberance.
Are you guys listening out there? Ed, just bringing the heat as always. I mean, listen. What I really like about you. Well, clearly we look at the market through similar lenses. So I like a lot of the things that you say, but what attracts me to your work is really the simplicity of it, the common sense. These aren't overcomplicated ideas, right? Like this is really how markets function. Prices of assets don't move because of news and quote unquote fundamentals. It's based on positioning, right? Where did the fundamentals change so dramatically from last December to this spring? Probably not. But you had the greatest 6-month period in the history of the NASDAQ. It's because people were positioned improperly.
Exactly. I mean, even during the Great Recession, like nominal GDP was down 5%, and yet we had a 50% decline in the S&P. Like that doesn't make sense. I mean, do you really think that if you do a discounted cash flow analysis that those companies really changed by 50% over the course of the Great Recession? No.
People were too bullish and too leveraged long, and they got caught.
Yeah. And so in some people, and you look at the top and bottom ticks; those are usually people who are forced buyers or sellers, right? The guy who's short stock goes parabolic. Who the heck bought that thing there? That was some guy who was caught short, and he had no choice but to buy it there.
That's right. That's exactly right. I want to hear your thoughts on this advanced decline line making new lows.
Yeah, how concerned are we about this? Same chart as Clovis brought along yesterday. I think he was using the Russell 3000, but it looks similar with these new lows, right?
Yeah. So I do have some concerns going into next year that we're starting potentially a topping process, which usually, not always, but usually takes several months to unfold. And so we hit new cycle highs in a lot of breadth gauges in the summer on that rally off of, in March to May is very narrow. I think there's great broadening June and July. But since then it's been it hasn't, the breadth has not been great. Again, you'd kind of expect that during a seasonally weak time of the year. But as we go forward, let's say we do get a year-end rally, we're going to watch and see, do these breadth gauges make new cycle highs? Do they make lower highs? And often what happens is during a marking topping process, the popular averages make new highs, but the breadth doesn't, and eventually it just gets narrower and narrower. So I put this in a pretty big warning sign of what could be happening going forward. But for now, it's a warning, not necessarily of an imminent problem, but one that could be coming down the pike.
Yep. All right, Ed. So you point to the seasonality chart. You're talking about some pessimism and sentiment. Sounds like a pretty good time to be doing some buying of equities. What specifically? What areas do you like here?
Yeah, so we're overweight energy. Firm commodity prices. It's actually had a good couple months, so I have to keep an eye on that. Industrial is another area, kind of a cyclical tilt, and then we also have comm services. We swapped out tech for comm services, which has basically been a wash, to be honest with you, since we did that a couple of weeks ago.
Yeah. Okay. So when you look at the largest weightings of the indexes, something that's really been on my radar lately is healthcare. Healthcare, largest component of the Dow Jones Industrial Average, 21%. Second largest component of the S&P 500. While a lot of these indexes and sectors have corrected, massive corrections over the last couple of years, healthcare has gone sideways, right? I feel like when you zoom out, you see what a monster healthcare has been over the long term, one of the best performing sectors over the last decade after tech. All it took was a couple of years of a sideways grind for investors just to completely forget about it.
Yeah, it's interesting because we haven't gotten a lot of questions about it either.
I'm not surprised.
yeah, and so do you like that, right? The forgotten area. So, so we have our
It's such an important area. It's not like, oh, no one's asking me about materials. Well, it's like, who cares, right? This is a big deal.
Of that market, yeah, and so we are in our sector model. Our macro fundamental indicators are slightly bearish. One of the things that's been a struggle is that usually healthcare inflation has been running higher than overall inflation, but with the higher inflation in the overall economy, actually medical CPI has been running below overall CPI. So that's been an issue for the sector, but that's started to turn up. So as the rest of the inflation rates come down, medical has been stable. So that's something to keep an eye on.
And is that medical services or like medical supplies and products? Like what is medical CPI?
I believe it's everything in medical. I might be wrong about that, but it covers the gamut. So, but then our technical indicators have actually started to turn positive. So some mean reversion indicators have started to pick up as healthcare has done a little bit better lately. So, and that's usually how our models work. As the technicals kind of tell you, well, just keep an eye on it, or if you want to follow technical solely, you get in there, and then the fundamental macro stuff catches up later. Especially,
are you saying that price leads, Ed? Is that what you're suggesting here?
It sounds like interesting. Maybe that phrase could catch on. Maybe you should keep saying that.
That's what the kids are saying these days. It's all the rage.
Yeah, it's all on TikTok. Yeah.
That's right.
Are there any particular subgroups within healthcare? It's such a diverse space, and some of these industries look great, and other ones look terrible.
True.
Yeah. Off the top of my head, don't have anything on that one. But yeah, I'll tell you that it is one of the tougher sectors for us to model for that very reason.
Yeah.
That it's pretty diverse, and some of the you get a company that has a great product and it's going to take off, and it's versus say
Aren't
energy.
industrials super diversified as well, though?
They have a lot of different groups in them, but they're all still fairly economically sensitive to some
Cyclical.
degree.
Yeah, fair enough.
Yeah.
How
That's
about
fair.
discretionary? Discretionary is another tough one, though.
It is, well, because it's the
So much.
Amazon and then a bunch of other stuff.
Tesla.
Home builders.
Yeah.
And then hold on, but Ed, do you think that the S&P 500 and Dow Jones Industrial Average are going to break out to all-time highs, and healthcare is not? Like, I think it's most likely going to happen together if it's going to happen. No.
Yeah, I think so. And I'm talking about absolute relative, right? So the absolute basis, if you make new highs, then you think, sector is important. Healthcare has got to at least participate. Is it going to lead, or is it going to is it going to follow? Right now, our model's kind of neutral on it. But yeah, I think if you were to quiz people and say what's the biggest sector in the S&P, most people say tech. What's number two? I'd be surprised if half people got it as healthcare.
That's right. And the largest component of the Dow.
Yeah.
What do you think they'll say?
Yeah, well, industrials, right?
Nope.
The industrial average. Yeah, exactly.
Right. Yeah. Well, that's very confusing when you talk about, because all the transports are the industrials, right? So it's very. If you're a new investor, it's not made to make it easy to understand.
No, it's almost like Wall Street tries to confuse you, so you just say, just give me your money and don't worry about it.
Yeah, that's exactly right. That's hilarious, by the way. So S&P 500 new all-time highs before February?
Yeah, I think we can get that by February. Now, then my concern after that is, where do we go?
But by then it's not football season anymore. We got more time on our hands. We'll worry about it then, right?
Yeah, well, I'm a Titans fan, so I'm ready to turn the page.
Got it. So you're ready for basketball season, right?
Yeah,
you're like a New
pretty
Yorker
much.
over here,
Yeah. Oh, Jets are making it interesting. You guys they want Tannehill, but you can have him.
How about that?
I love that the Dolphins just gave you Tannehill. Now you have to deal with what we were dealing with. I'm a Dolphins fan growing up in Miami, so.
Okay, yeah. Well, he was good for us for like a year, and then from there. So
yeah, he's not going to win you games. He might keep you in the games. He ain't going to win them for you though. Ed, last thing. Where do you think? We talked about coming into the year, people were off sides. Sell side analysts, economists can't believe it. They were on the wrong side. Short sellers. There was a lot of stuff that was pointing to be very aggressively long in the fourth quarter last year and the first couple of quarters this year. Where do you think the biggest offsides is currently? Could be fixed income, could be Forex, specific sectors, a commodity, copper, anywhere where you think is because we talk about sentiment all the time, and almost always sentiment is not in an extreme, right? By definition, it's somewhere in the middle.
Yeah.
Where do you think it currently is at a major extreme that you're like, wow?
Yeah. So then, question is when is it reversed? But if here's an example. You take the we call them the Elite 8 tech stocks. Which is Facebook, Amazon, Netflix, Microsoft, Google.
The Elite 8, I like
the Elite 8. Yeah. So anyway, they're about 29% of the market, but they're only 18% of earnings, and that gap is the biggest on record for, just say, the energy sector, which is about 4% of the market and it's about 12% of earnings. So again, these things can stay there for a long time, but I think there's a lot of there's been so much interest in AI, and if I just wonder how long it's going to take for the earnings to actually come through in AI. There's a lot of work that has to be done before that comes to fruition, versus a sector that's pretty much been unloved because of the green tech overexcitement about green tech and the fact that oil prices didn't rally after the Ukraine war started as expected, and so there's an area that's probably a little bit unloved.
Speaking of Wall Street just abusing investors, convincing them all that green energy stuff, what a scam, what a racket that was. They made a fortune on that one.
I think everybody kind of, it was an opportunity was there. And we'll see next year. Does it come back in with the election? Has it become popular again? I don't know. I think probably, investors have realized it's maybe it's the future, but that future is a long way off.
Yeah. Nice hustle there, Wall Street. Do you think that mean reversion in the energy versus tech, like you described, do you think that reversion started in 2020 and we're already a few years into that, and this has been more of a digestion within that ongoing reversion, or do you think it hasn't gotten started yet?
Yeah, no, I think so. I think we've to clarify. I think it did start a few years ago. This era of kind of higher inflation is going to be better for the cyclical value.
With
area.
oil trading below zero, was that enough of a of a
yeah. There's a sentiment extreme for you. Yeah.
Yep.
Yeah. So, but if you look at, say, small cap growth versus value, like Russell 2000 growth versus 2000 value, growth has acted like crap the last few months. But if you look at the large cap where the mega caps are, it's okay, growth's still doing well. And so I think under the surface, the value has started to show its strength. It's just the handful of these they're great companies and they're very popular, and they think they're masking what's going on under the surface.
Oh, that's great. When you look at at value on an absolute basis, you look at large cap value on an absolute basis. Look at IWD. It's really been sideways. Looks like healthcare is really what it looks like. Kind of side. Looks like industrials. Looks like healthcare. Like that sideways churn over the last couple of years. Like, seems constructive to me? No.
Yeah. So I mean, you got to wait for the breakout, but yeah, I think if you think relative, which to be fair, I live in a relative world, and think, oh well, value's been terrible. Well, it hasn't been terrible. It's been treading water.
Yeah. When you compare it to something as dominant as the numerator that you might be comparing it to in terms of growth, like let's remember what you're comparing it to and be fair. Like, people are like, they go into a city, they're like, well, it's not New York. It's like, well, yeah, but it doesn't have to be New York to be a great city. Or, you know what I mean? Oh, I like Wagyu beef better. Yeah, me too. But this ribeye here was real. You know what I'm saying? Like, you can't always compare something to like these like extreme outliers. You know what I mean?
Yeah. Oh, yeah. Or the people who hate LeBron James because he's not Michael Jordan. Well, I'm an age where I love Michael Jordan too.
That's
you're
right.
Not going to find a better athlete,
Ed.
but LeBron's
you,
pretty
Ed.
good. Yeah.
He's all right. He's all right.
Yeah.
Hold on, Ed, before you go, I think it's really interesting the fact that you just dropped about energy making up 12% of earnings, but only 4% weighting. It's a cyclical group. So, like, what have you seen throughout history? Does price action typically catch up, or does the market just kind of discount those earnings because they might end, unlike a secular grower like in tech or something?
Yeah, no, it's a fair point. If you were to look at that chart over time, it does fluctuate a lot more than say the Elite Eight sector tech titans. But but usually you'll see the price catch up to some degree. So there's mean reversion potential in that.
Got it.
And quickly, small caps. The bears keep pointing to the small caps. I would point to the mid caps that look like that healthcare chart, that look like that industrials chart, that look like that value chart, that sideways grind. Do you tell the perma bears that are pointing to small caps to look at mid caps?
Yeah, so actually, this is like one of the hills I die on. Is that if you talk about sub asset classes, mid caps is like the forgotten area. So,
I know. That's why I threw you that alley-oop. You want to bring it home?
I appreciate that. Yeah, preach. Yeah, preach to me. If you want to diversify out of mega caps, you don't have to stick to just small. There's a lot of good companies in mid caps, and they don't get hit by all the fluctuations that hit small caps sometimes.
One more thing. I think it's bullshit that mid caps are 2 to 10 billion. $10 billion in 2023 is not a large cap, Ed. Come on. You got to take mid caps to 30. No?
Yeah. Well, so we just use the benchmarks, and so you say whatever. So hopefully
they haven't changed those benchmarks in 25 years. Come on, Ed.
Longer, right?
Longer, probably.
Well, what do you mean? Who's they? Because I just use whatever Russell.
Who is that? Who is they?
Yeah. Who is they? Two people.
Yeah, exactly. Yeah.
2 to 10 billion.
No, but you know what I'm saying? $10 billion. Is that a large cap? Come on.
No, I'd say you say it's the Russell top 200, right? that's the mid caps, and 201 to 1000 is a Russell mid cap. So wherever that 201st stock is, and if you after a bull market,
It's probably better.
Oh,
All
really?
right. All right.
Yeah. Yeah,
That's a much better way to do it. Yeah.
See?
Than
Ed
anything
Clissold,
between
bringing
2
the
and 10.
heat as always. Love it. Love it.
All right. Thanks
Thank
a lot,
you,
Ed.
Appreciate it.
anytime, guys. Love the show. Appreciate it.
Appreciate it. Thank you.
All right. That's probably a better way to do
He's
it.
the man.
How did
He's
we
the
never
man.
think of that? You just rank them. That's it.
Yeah. That's it.
You just
Fuck.
grew.
Great.
Yeah.
See?
That's great.
What a stud, Ed Clissold.
I'm ready to go back and keep talking about healthcare. You opened up a can of worms here, I think.
All right, bring in Kimmy, and then we'll
boy.
get back to healthcare.
Oh, the healthcare! Holy cow! And then we got to talk about Bitcoin. I know, but we got to talk about it. But let's see what Kimmy's up to.
There's nothing to talk about. Kimmy,
Morning, guys.
What's up?
what's up?
What's up?
Oh, gold, silver, euro,
Are they up?
volatility,
Joel?
and interest rates.
Yeah. Bitcoin popped yesterday and then dropped, huh?
Fake news. I can't believe it. The journalists are misleading their audience. Wow, I can't believe it.
Yeah, that was a very interesting situation.
What's interesting about it? They're glorified gossip columnists. I don't feel guilty.
What's interesting about it is, what's interesting is that we can get into this now a little bit, but I'm always asking myself, what is a headline worth? Like, what is the value of a headline? And yesterday we found out what the value of a very specific headline would be if it were true. But in this case, it wasn't.
Right.
So it was worth about 8 to 10% in Bitcoin, right?
Yeah, ripped and then dropped, right? I know.
Right, exactly.
So now, right?
Right. So now we know where, and it's not even a surprise. Everyone expects the headline to happen sooner or later. It's just a question of when. So now we know whenever that does happen, we have a bogey in mind. 8 to 10% in Bitcoin it should be your baseline for the move.
Kimmy, when you see a headline in Bitcoin like that, or for whatever reason you want to be trading Bitcoin, which of the stocks is your go-to? Is it MicroStrategies, MSTR?
Yes, MSTR.
Yeah.
But I'm not. I saw news. I saw Whippy. I was like, okay, I'm not going to bother with that because I don't know what the heck's going on.
So you didn't touch it.
MSTR really for me now needs to get above 344. It's in the 300. I can't keep track of 200, 300. It needs to get above 344 and kind of hold that level.
Yes. Those are the April highs.
Yeah, and today, we're gapping back down. We're in this channel in here. Not sure what the headlines were this morning. Who knows? Obviously, more war stuff or whatever it may be. Some oil names are up, right?
Market ripped yesterday. It's giving back a little, no? What's wrong with that?
Yeah, giving back more than it should.
Dow transports were up 2% yesterday, Kimmy. That's a monster move.
On the SPYs, we're down like 3 or almost 3. Nvidia's getting hit this morning. Some of the semis are getting hit. So we have to see. I have to tell you, we're such in this tight range. Yet last week, my target in the SPYs were 438.40. We hit that pre-market one day last week, which I did alert the room. If they had it, they could have sold out because that was my ultimate target. But I want to see that hit during trading hours, that 438.40 area. We still have not hit that during trading hours. So we'll see. A little bumpy in here. Not much is interesting me.
I want to hear. I'm going to throw up.
Last week, I was like, just lots of names, very interesting, lots of things, ideas. I just, not much is really, sometimes when things aren't really, exciting, you kind of back away for a bit.
You throw up slide 1, Kimmy. I know you mentioned Shopify this morning. Throw that up there, Spencer. Tell me what you're seeing here.
It's trying to get back above its 200-day around 53.50. It's got to get above that and then get going, and then head maybe up to this gap up there, maybe like 56 area or so. That's if it gets going. It's dicey. Nothing is really standing out to me. I put that in there because I lured it in the room in case it gets going. I really just don't have much on my radar today.
I like that 53.50 level that you're talking about, because now you're really looking at those February highs.
And sometimes the name moves to that level and then pulls back in. So it's sometimes it pushes to the average and then stops. So we have to see if it actually pushes through or not. Sometimes you take a shot, and see if it does, and sometimes it goes, sometimes it doesn't. And that's the name of the game. But
You're leaning towards the long side for entry points versus shorts here, huh?
yeah, Airbnb is gapping down. It keeps trying to hold the 200-day. I'm watching that one at 123. I can't keep remembering the 200s, 100s, every name, because I don't have my screen up. That Airbnb is riding a thin line here.
It's stuck at the bottom of its range.
Right.
Yeah.
And it keeps testing that 200-day around 123. So we'll see if that holds or not. And we'll see if this market holds up. Really, I'm going to want these SPYs to hold around 432.50 and not back down. Yet, today it finished yesterday's pattern, almost looked like a flag. It would have been nice to pop this morning up into the 438.40 area, and then pull back in.
Still can, Kimmy. I mean, the market hasn't even opened yet. Let it dance.
Oh, yesterday I made a recommendation around 434, 433.50 on the SPYs. I said, you could buy the SPYs up to here, and let's see if it pushes to 438. But at 437, I said a lot of resistance here. You could trim some, keep some if you want. And I think a couple of people in the room did take it and take their money and run. So we'll see.
Interesting move.
All right, guys.
Value yesterday. Go ahead, Spencer.
Yes.
Yeah, if you want Kimmy's trades as she's making them in real time, the only way to get them is to be in her room where she's going right now. She trades through the open, through the morning, calls out trades she makes, calls out some trades she doesn't make too.
Yep.
So if you want to get that, the link is in the description. As always, Kimmy,
have a good day.
have a good one.
Bye, guys.
All right. People in the chat talking about, okay, so I want to just follow up on the Bitcoin point. My point was not that the next time when we get the Bitcoin ETF headline for real, that Bitcoin is going to go up 8 to 10% and stop. My point was, now that we know that headline is worth at least 8 to 10% in premium in Bitcoin.
But do we know that? Do we know
context? Hold on. What are you talking about, Spencer?
I'm talking about the reaction to the headline yesterday.
So was that headline real? What happened? There was confusion.
No, it was not. It was not real. It was Cointelegraph came out and said, "Oops, our bad." And then, funnily enough, the CEO was at a conference in India or something, somewhere, and she totally rather than own up to it, she blamed social media. She blamed society. She was like, "It's your fault that we screwed this up." But anyway, neither here nor there. Just fine.
So if this was fake news, why is Bitcoin still up 5% on it?
And that is the other great point I want to address. You have Bitcoin trading higher this morning. What's it up? It's up about 2% from before this headline yesterday. And
it's up
great point.
No, 5%. It was up 5% yesterday.
Well, it was already up though. It was already up before this headline happened. It was and then the headline hit around 28,000. We're at 28.4 right now. So I'm looking at the futures.
Right.
Okay. So anyway, my point is, great point though. It's still up on nothing, on a headline that wasn't real, which is also just a funny thing to observe. So why is it up? I don't know.
Funny is watching all of these simpletons chase news headlines and ignoring actual price behavior. Ignore these journalists. They're gossip. They write gossip columns for a living. It's no different than a Kardashian breakup or an NFL trade rumor. It's just gossip.
It's a little different than a breakup.
No. I'm more interested in a Kardashian breakup than I'm interested in what some journalist thinks about asset prices.
We should really be showing a daily chart here.
But that weekly chart tells the whole story, Strazza.
Yeah,
it's
but
stuck below overhead supply.
I want to see the story from this week and yesterday's candle. Sorry, no, that was my computer. Okay. All right. So Bitcoin. Can we talk about the strike?
Yeah. Wait, let's do the banks real fast. We had Bank of America and Goldman report earnings this morning. Bank of America, I'm sorry, Goldman, last I checked, was like flat as like Nebraska this morning. It still is extremely trading flat. Their numbers were okay. Everyone's numbers are fine compared to the estimates, right? It's not really about that. Goldman is still having to compare itself to, like, they had that amazing period, like Q4 of 20 to like Q1 of 22, right? That year and a half where they just like, obviously there was like a gajillion deals to be made, so they were just drowning in money.
Yeah.
So every quarter since then has been a tough comparison. But as the numbers compared to estimates, they were okay. Trading revenue was flat. Bank of America is up because their trading revenue, they had their best quarter in terms of trading revenue growth in like 10 years, right? So their trading desk for equities and fixed income did very well. That's for Bank of America.
Okay.
And so that's why that's trading higher this morning.
So JC, earnings are out of the way now. We could trade these things. I think these are so tradable right here, right now. We talked about this setup in Bank of America. We talked about this setup in Citi. Citi has what, tomorrow, Spencer?
What's on can we bring up the calendar real fast? I don't even know. When is Citi?
No, Citi was Friday. Citi was Friday.
Oh yeah. Citi was last week. Right. Yeah, Citi was and JP were last week.
I think you could trade these off the lows here.
So then buy small caps is what you're saying?
No. Buy Bank of America is what I'm saying.
Because you think that Bank of America and the Russell 2000 are going to move in opposite directions?
Maybe. I don't want the small financials. I don't want the regional banks. Yeah, I get it. You make a good point, but I want only the biggest banks. That's it. I would trade these ranges. And yeah, Spencer, the big earnings report in the banking sector was not Goldman. It was not Bank of America. It was Boney. And they're moving lower.
What? It was who?
Bank of Boney. Bank of New York.
Oh, I've never heard it called Boney.
I've never heard
before.
Anybody call it Boney.
I've been accountant for 10 years and dealing with these banks. We got acronyms for everything.
Boney?
Yeah, Boney.
Holy moly, that's a new one for me. Anyway,
what I
wanted to ask you,
Strazza used to be Boney, and then he started eating a lot of croquetas.
Riley, that's funny.
Wait, see, what I wanted to ask you is, all these companies are reporting obviously huge held to maturity losses on their bonds. Mm-hmm. Should we care about that or no? No?
What do you mean?
Okay.
What do you?
I don't know. They're paper losses, and sometimes paper losses turn into real losses. I don't know. I'm not an accountant.
Oh, yes, you have to care so much. That is exactly the issue with the banks. That these securities, if they need to be liquidated, means massive losses for these banks, and that's how they're blowing up.
Can we quick little rundown? Dow down 100 points here on the open. S&P down 68 basis points. Nasdaq down 1%. 30-year bond futures down 1.3%, getting hit hard. Gold and silver flat, surprisingly. Copper down 1%. Oil flat, and the dollar inching slightly higher with volatility and interest rates. And that is your morning rundown. How did it do?
Yeah, I'm going to have to look into this Bank of New York report.
Yeah, let me know how that works out for you. What is it about healthcare that you wanted to talk about now that you're all junked up on healthcare?
Throw up these subsector charts. Let's talk about them. Right? I think I want to illustrate the theme that I keep pointing out, which is that it's a very, very mixed space. Right? So new lows, medical devices breaking down. JC just came on here and showed a bunch of bullish charts that are breaking out, look like they're making new highs. How about this one? This is an index.
Yeah. Bad news bears.
Yeah, we talked about it yesterday. I mean, this is like, I put it in the same category as like these, ARC, super growthy type names. I understand Kathy Wood doesn't buy these types of stocks, but they're just, part of that smaller cap growth story that hasn't been working versus some of the mega cap growth, some of the more value oriented areas. It looks like that, whether it is or whether it isn't, that's how it's behaving, isn't it?
Yeah. Yeah, you're right. Throw up these pharma ETFs now. Boy, oh boy, not all pharma indexes are created equal. Show PPH now. This is Spider Pharma, XPH. Oh, wait, I marked them wrong. The second one is PPH, right? So you want to own PPH, which is shown here with the wrong symbol, pressing towards new highs. And then XPH, if you go back, the Spider, looks completely different. If we look at the holdings, it's because one of these has a lot of Lilly and the other one has almost no.
Yeah, the XPH is equally weighted, and then the PPH is cap weighted. So you got 7.5% Eli Lilly, J&J, Novo Nordisk is the number 3 holding, Novartis, AbbVie, Sanofi, AstraZeneca, Merck, Pfizer. So you're better off in the cap weighted area. Same thing in biotech, by the way. The equally weighted biotech dramatically underperforming cap weighted.
So again, right, it goes back to this same theme that we keep talking about of a thin market of mega cap strength and leadership. If you equal weight things, or God forbid, look at small cap indexes, they don't look like the mega caps or the large cap indexes.
Listen, Clissold made a hell of a point. If you want to diversify away from mega caps, you don't have to go to small caps. Mid caps are holding in just fine. Mid caps look like the XLV healthcare index. Mid caps look like the industrials XLI index. Mid caps at Clissold constantly talking about mid caps.
That's a great point.
Wait, and then going back to the healthcare thing, not to pick on anyone in particular, but I'm pretty sure, I'm looking it up now, like the worst performing non-pot ETF this year has been the cancer ETF, CNCR. It's all oncology.
I didn't know there was a cancer ETF.
Yeah, it's all oncology stocks. It's gotten absolutely destroyed. I'm looking.
This thing's been around forever, and it's been bad forever. Can't own this. Yeah, that's a trash fund. Got news.
Trash fund.
It is.
Yeah, it's been bad. Anyway, okay, so
trash fund.
All right. Let's move on here. Yeah, CNTR is the ticker on that. All right, let's move on. A couple headlines we'll get to, and then we'll do Hot Corner, which was massive today, and then we'll bring on Patrick for chart report. Ford.
Yes.
There's been a steady stream of headlines not related to the strike about Ford in the last week or so. About a week and a half ago, they announced they announced that their sales for the Lightning, which is like the EV F-150, sales for that fell 46% year over year. Then a couple days later, they announced a price cut on the Lightning that would be as much as $15,000. And then this morning, they are cutting a shift at their EV plant in Detroit. So all these things are obviously related, right? Demand for the electric F-150 is not anywhere near either what it was or what they thought it would be. And, you know, they sort of put all their eggs in that basket. They're investing an obscene amount of money in electrifying their fleet. And this was their crown jewel, right? The electric F-150. Demand is nowhere near where they thought it would be. So that's a problem for Ford. Anyway,
Spencer,
I was like, Ford's got a lot of problems.
Yeah, they do. Spencer, you sent me this. I'm throwing it up in the slide one yesterday on Twitter. I just want to say, good for Bill Ford for coming out and making this statement. I could just
he was angry.
Listen, he should be angry.
He was pissed at that. Executive statements usually are pretty vanilla.
Listen, you'd be angry too if you wish you owned more Tesla and you're stuck in that piece of hot garbage.
It's true.
No, I would be angry too if I were him. This is ridiculous. Listen, I think the things he came out and said, angry or not, he made some fantastic points that should not be forgotten through something like this. He said the UAW leaders have called us the enemy. I will never consider our employees as enemies. This should not be Ford versus the UAW. It should be Ford and the UAW versus Toyota, Honda, Tesla, and all the Chinese companies that want to enter our home market. Good for him. Yep. They are destroying this company. And he also he made some statements about how happy Toyota and Honda and Tesla must be. They're ruining Ford. They're not going to be able to compete.
That's right.
Also, this isn't good for consumers. You're all going to pay more for cars now. This is good. For
No.
Car market was already.
They're gonna pay more for those cars.
Yeah.
There's going to be a supply crunch in the automobile market. Period.
Didn't we just do
The
that?
car market is already fucked in this country.
They must be scared about losing big contracts too, right? Because
dude, they're done. Those man.
A lot of what Ford
all these employees that are striking to get paid more, they're all going to be unemployed.
It's a shame.
Zero in like 20 years, man. It's going to take a while.
I don't know.
What?
I don't know, bro. The market is a discounting mechanism, Mr. Spencer Israel.
There are still newspaper stocks. Are you kidding me? Like, these
how are they
things
doing? How are those newspaper stocks doing for you?
They're still around. Is my point. It takes a long time. Okay.
Throw up the statement. You guys could go find this on Twitter, but this was from the earnings call with Bill Ford, I guess. So why is it? It sure seems to me that all of these companies that have issues with strikes are the ones that really can't afford to have issues with strikes, whether it's airlines or grocery store chains or automobile makers. Like, these are the companies that are barely getting by the way it is. I don't know. How come there's never strikes at Google or Apple?
Not yet.
All right, throw up the performance charts here. So
probably there's no unions.
Stocks going back about 10 years. Terrible. Market's up 250%. These guys are unchanged. Now look at the Japanese auto stocks.
Amazing what happens when your employees actually work. Right? Don't they work twice? Not to get all fundamental, but don't they work twice the amount of hours?
Listen, I don't know about any of that. The point is that the
fact that I do know is pretty impressive, I think.
The U.S. automakers can barely compete the way it is. Now with this
By U.S. automakers, you mean Ford and GM?
Yeah.
Tesla seems to be doing just fine. How are their unions doing?
So JC is pointing out the fact that Tesla workers do not unionize.
And what about the Japanese?
Not yet. They don't. There's been talks of that, but
Listen,
Asia,
we all want to make more and work less. There's nothing wrong with wanting to make more and work less, but you're just going to be unemployed. So what's
they want a 35-hour work week?
Yes, 4 days a week. These idiots want to work. Get out of here, bro.
That's pathetic. All right,
it's so pathetic. But these unions, their jobs are to fight to get their, who they work for, the most amount of money and benefits, regardless of the implications to the firm. They're not interested in increasing shareholder value. They're interested in increasing employee compensation and lowering the amount of hours that they're trying to work. That's their jobs. There's nothing wrong with that.
That's a good point. Everyone saw that amazing deal the UPS union got last year, and they want some of that action. Look, labor and corporate, it's a pendulum, right? It swings back and forth constantly, right? It takes like decades for it to work through.
Those things are I'm looking forward to shorting it when they start breaking down.
Climate activists, throw this up. Greta Thunberg arrested at London protests disrupting major oil companies.
Thunberg, and who cares?
Get a life, man.
Who cares?
Who cares? This is you talk about headlines being meaningless. This is meaningless. I don't care. Maybe you care. I don't know. I don't care. I have a couple. I do have an auto headline for you. Speaking of cars, cars not named Ford. BYD, right? This is a Chinese
EV.
This is China's top EV maker. They gave some guidance for the third quarter. They said their net income will come in as high as $1.6 billion. And that's even though their growth is slowing. That's sort of interesting. And the last quarter, they sold 822,000 EVs / hybrids, which is almost as many as Tesla did in China. So they're basically neck and neck with Tesla there, and BYD. So EVs, I don't know. It's kind of weird because demand seems to be slowing, but yeah, their net income is rising. So maybe they're working on the profitability stuff. I don't know. BYD is trading higher on that headline this morning.
This was one of the first stocks that I ever owned.
Really?
Yeah. These guys have been around forever. Throw up chart 1. It was BYDDF.PK when I bought it. It must have been
Oh my
2000.
God.
Look at Strazza with his penny stocks.
Dear Lord, are you serious? What is this?
I sold it at the lows.
How did you buy this? How did you buy this?
I paid over $100 in commissions. I'll never forget it.
That's how.
Mm-hmm.
Oh my God. What a nightmare.
Imagine if I held it.
You would have had to stomach quite a few drawdowns.
Buffett has been in this one forever. So long. I think that's why I bought it back in the day.
Maybe.
Been around longer than Tesla. Nobody ever talks about them.
Wait, I didn't even realize that. Is that what BYD even stands for? I had no idea.
BYD is Build Your Dreams, yeah.
I had no idea.
Yep.
Wow. All right.
Yeah, cool company.
All right. As far as headlines, there's one other thing. And this is funny. You don't often see. Sometimes you see like a merger of equals. It's pretty rare though to see a smaller company try to acquire a larger one. So Wyndham Hotels, WH. Actually Wyndham Hotels in this case the acquirer is a little bigger in terms of market cap, but in terms of not that much, but in terms of number of locations, the acquiree is bigger. So Wyndham Hotels has been approached by Choice. So CAH, right? CAH is Choice Hotels. CH. They're trying to acquire WH, Wyndham Hotels. They've offered a cash and stock deal. And Wyndham Hotels said, thanks, but no thanks. Apparently they were talking for the last month and Wyndham Hotels just like disengaged. So CAH just like dropped the press release saying, yeah, we're talking to them. And they're basically about the same size market cap wise. Wyndham Hotels actually has more locations than the other one.
Yeah. But it is strange. Would basically be a merger of equals. So just for some background, Wyndham is Days Inn, Super 8, Ramada, Microtel, La Quinta, and then Choice Hotels, the acquirer, tried to acquire. Radisson, Clarion, Sleep Inn, Quality Inn, Comfort Inn.
All those crappy roadside motels.
They're all terrible.
That's what this is.
But these companies should combine. Right?
Probably.
They're all like motel, cheap hotels. Yeah, I don't know.
Yeah. Okay, can we do? Well, let's do Hot Corner real fast, and then we'll bring on we'll bring on Pat. We had big Hot Corner table today.
Marriott, Hilton.
Hot Corner. So hot right now.
All right, give it to me, Strazza.
Throw it up.
This thing, it's a long list. I mean, it was dead yesterday. Look at this sucker today. Woo!
It's been dead for
so
a while.
much action.
So don't go buying all your stocks at once, Mark Wayne Mullen.
Jeez Louise.
So the reason the list is so long today is very simple. This was one filing. A senator, Mark Mullen, bought everything.
Who is this guy?
I don't know. What state?
What stock is he buying?
And this filing came in last week, by the way.
Yeah.
I don't know. I don't know congressmen or people.
Oklahoma.
Listen, he bought some good stuff, right?
He's an American and Cherokee Nation businessman.
Go back to the list though.
Damn, son.
Amy Vance.
He just got a nice bonus and was like, let's go.
I know. Bought a lot. What really stands out to me, though, from today's list is insiders are still buying home builders.
Oh, my God.
We've seen a lot of insider activity in the homies since last year. and it's still happening.
Is it time? Is it time to get interested? I haven't looked at them in a hot minute because they look so bad.
They corrected a little harder than some of the other leaders. You got some throwbacks to key levels, and some of these are very actionable. Lennar, I would want back above those 2021 highs around 116, 117. Do we
They
have
all look exactly the same, but notice how they're not getting oversold above their 200-day, rising 200 days. Consumer discretionary continues to be a leader.
Yeah,
this looks like an area, worth a dip buy here for
Great
sure.
point, JC. Lennar, like I said, hard correction down, I don't know, almost 20%, right, since the July peak. Didn't get oversold.
Yeah.
I think this is a buy on strength setup back above the 2021 highs, and that's the case with a lot of these home builders right now. DR Horton, same setup. NVR, right there. Yeah, they look good. Toll, same thing. I like the homies. This one really does stand out.
NVR holding up the best of all of them.
This bull market's going to rage
the biggest
on.
one too. Isn't NVR the biggest one?
Yeah. Well,
No.
it's the most highest price one.
No,
right?
DR Horton's the biggest one. Lennar's second biggest.
Huh. Okay.
If this bull market's going to rage on, this is a group that you probably want to be in.
Yeah, NVR is only 20 billion. Based out of Virginia. Fun fact.
Is it hard for people? Like, what do you think about the sentiment around real estate right now? We did a couple articles on here, a couple stories last week. It's on the front page of every other newspaper every other day, this commercial real estate issues in all these metropolitan areas. And then we're on here saying, hey, home builders are some of the strongest stocks. Is that hard for people to kind of square?
Patrick can also speak to this a little bit. Should I bring him on?
Yeah, bring him on.
We've been talking about REITs a little bit on the buzz. Yeah.
Hey.
Yo.
There he is.
How you doing?
What is the deal?
So I'm not sure I can shed too much light on the real estate thing. I'm no expert in that field by any means.
No, but is it true or not true that maybe not this week, but at several points in the last month, you've highlighted REITs in the buzz as stocks that were trending for whatever reason?
Yeah, I mean, they've been kind of a contrarian play for months now and hasn't really materialized into any meaningful upside. But I do think I get what you're saying, Strazza. I think it is an interesting point that you have home builders on one hand holding up great, area relative strength, but then on the other hand, you have this awful sentiment in the real estate market, and price isn't really confirming. It's just continuing to kind of be a laggard. So it's definitely interesting there.
Can commercial real estate just have its issues and home builders be fine though? I don't see why not. Right?
Do home builders make? I'm no fundamental analyst, but are home builders building commercial real estate?
No, that's my point.
By definition, no, right?
No, they're residential. So
not yet, they're not.
I just think it might be hard for your average investor, right? You're hearing about these issues in the real estate market, and then you're going to go out and buy home builders. I just think most people aren't going to do that.
You're surprised that it's hard for the average investor?
Listen, Pat has stumbled upon some good-looking REITs recently. We've been talking about them past.
What's your favorite, Pat?
There's OHI and SBRA. They're both nursing home REITs, and they've been kind of one of those rare pockets of strength within REITs. And I mean, I don't have to tell you about relative strength. You know how that goes. If real estate does turn around, then those should be the ones that you want to be positioned in. If that headwind, whatever it is, gets taken away, you'd expect those that held up the best to continue outperforming. So
a little scoop and score setup at the index level. XLRE, IYR. Strong bounce back above those pivot lows.
Yeah. Sentiment down in the dumps.
Yeah.
Speaking of pullbacks, can you throw up slide 1? Somebody in the chat asked about M-phase, I noticed. And this has been one certainly on my radar.
Don't want it.
Trades very cleanly above 120, Strazza.
I don't think these stocks are done falling.
All right.
But there is a level, right? If you're interested, this is one that you've been watching. This is a very solid entry.
Man, and then looking short term, looks like a bearish to bullish reversal. One of the most epic uptrends in the world, right? Like, forget Nvidia. Look at the returns on this guy, right? And you know, we've consolidated over a couple of years. We're down at the lower end of this range. Looks like a decent place to take a shot.
Yeah, I'm with you. Don't want to get all fundamental, but I think these companies still have problems.
Well, they corrected by 60-something% in like a year. So the market agrees with you.
Lost 2/3 of its value.
That's right.
Not the first time it's happened.
I know.
No, that's what these things do.
Yeah.
But anyway, looks like an interesting opportunity here above 120.
All right, Pat. Anything interesting in chart report yesterday? Let's bring that up.
I mean, plenty interesting. So, you know, chart of the day, we use that gap. I think that's kind of the intermediate or the most immediate kind of objective that we are kind of dealing with this week, and that's kind of what the bulls need to achieve. If we get above that, what is it, 4,400 level, that should fill that gap, and that also invalidate that head and shoulders. And I know Steve, JC, I mean, failed head and shoulders tops, those can lead to some pretty nice upside moves there. So that's that was a really interesting one to me. You know, precious metals definitely getting a lot more attention, and I'd love to hear what you guys think of that, and if you guys think this move will actually stick or not, because man, that chart has been the boy who cried wolf for a couple years now. What do you think, JC? You think it sticks?
If real rates continue higher, I have a hard time believing that it's going to stick. I continue to be impressed with how well precious metals are holding up despite those rise in real rates. I am, but I got to see it, man. I got to see it. We continue to just see underperformance out of the gold mining stocks. I think it's coming. I do. I think we ultimately get a breakout. I think metals have their day. We talked about the bull market in commodities. We've talked about it before. I brought it up yesterday with Kolovos. You know, you don't get secular bull markets in commodities without metals participating. So if we're going to get, if we're seeing that, then I think you're going to get some rotation into those metals. I don't think it's going to happen with real rates continuing to rise, and they're on the rise today, but gold and silver are hanging in there just fine. So it's really, really interesting dynamic that I think needs to be front and center. Again, I got to see it, but it's setting up, certainly setting up. I love to see the resiliency in these names despite what's happening around it. Impressive.
Yeah. Did Kolovos bring on his Dow commodity chart? His Dow versus commodities chart?
No, but we know what it looks like.
Right. Yeah. He's been on that point, that whole like it's either stocks or commodities kind of thing. And when commodities have the baton, they can really run for a few years.
We done talking about gold?
Strazza not entertained.
I mean, I think from a sentiment point of view, though, it would make sense for the breakout to finally happen when nobody expects it and everybody's given up on it. Nobody wants to hear about it anymore. I think that's when you'll finally get it. And that Friday reversal the other day, that was the type of move that I think you could believe in, actually.
What's with this weakness in semis today?
Rotation.
Oh,
actually, Spencer, if you could go up to that chart from Lizanne Saunders, what do you guys think of this?
I think it's bullish. I think it's bullish when you have like a fundamental analyst who needs to buy Twitter followers to like look cool, is, you know, cherry picking the last two cycles to talk about market breadth. So I think somebody getting out of her own lane and cherry picking, I think that's probably signs that take the other side.
Tell us how you really feel.
What'd she ever do to you?
No, I don't have any problems. I'm just saying. I'm looking at it like as a contrarian perspective. I'm sure I don't know her personally. I'm sure she's fine. But what I'm saying is like understand what's happening here and how you want to construe that. I think that investors need to remember that there were cycles before the year 2000, right? I think a lot of people forget that. So I think that focusing too much on these prior last couple of cycles, I think is a mistake. And when I see, you know, certain like sell side strategists and stuff like that, you know, that are like, you know, like in engagement, people looking for engagement and stuff like that, like that's interesting to me as somebody who's been following Twitter streams and following sentiment for as long as I have. This to me stands out as when they're pointing to maybe weak market breadth, I would take the other side of that.
Interesting. And then that retail chart above from Kolovos, I'm sure you guys might have talked about it yesterday with him, but that one caught my eye because it looks just like the Russell and financials, but also it's like, when was the last time we talked about retail? There really hasn't been much to say about that group. And you look at the chart and you can tell why. I mean, it's just been so range bound, but here we are successfully holding at support again. You know, do we turn and finally break out of the range, or are we going to just keep staying in this thing until 2027? And Steve and I have kids and we're still talking about the range that retail and the Russell are in.
Yep. It's been a mess forever. Listen, I think this looks like small caps. I think it looks like micro caps. And I'm watching that IWC chart so close these days. Looks like it's resolved lower for now, and that's no bueno.
Is the micro caps? I thought I heard somewhere that IWC is like basically the 1,000 lower half of the Russell 2000. Is that true, or is that
what? Sorry, what'd you say? I was reading.
So are the micro caps like, is IWC the bottom 100 of the Russell 2000, or is it totally different?
There's a lot of overlap between the two, but I do not know the answer. We'll have to check.
Okay, but there is some of the same components.
Yeah.
Oh, okay.
Quick! I got a good recess. Go hit it.
Yeah. Oh, he's got a good recess today, everyone. All right, brace yourselves. It's coming.
All right, this better be good.
Lemon pepper wings. I'm telling you. Lemon pepper wings. I'm telling
He
you.
went back to Wingstop, didn't he?
I did not. I do them better because they fry them. I don't like them fried. Listen, here's the trick. You want to know the random trick that I learned? That's like so random to me. I'm sure there's a scientific reason. Avocado oil.
It's good stuff. It's great stuff.
I don't know what it does different than olive oil. I'm not a scientist. It does something.
It's made from avocados, not from olives.
The way the oils vary is they have different boiling points, right? So some are better.
Yes. But I don't know why when you toss the wings in avocado oil and then you bake them, why it comes out so crispy. Like it doesn't. I don't get the same crisp with the olive oil. So there's something about the avocado oil. Anyway, toss it in the avocado oil, no seasoning, nothing, just avocado oil, and then you bake it for 400, and then when it's out, then you rub some butter on top of it, sprinkle a lot of lemon pepper seasoning. You can get it at the store. Flip them, do the same thing. I'm telling you guys, no ingredients. That's it. Just avocado oil, butter, and lemon pepper seasoning.
Noted.
Delicious.
Sounds good. You're making me hungry.
All right. My recess is, if you miss the way Twitter used to look before it became X and before they changed the logo and they changed your timeline, and you want to revert back to the way things were, free plug for a Chrome, actually not just Chrome, any browser extension that I found yesterday. It's called Control Panel for Twitter. Just Google or whatever, Bing, whatever you use. Control Panel for Twitter is an extension. I have the bird logo back. I have my old timeline back the way it was for all those years, and I'm happy.
That's cool. So, I might do that.
Yeah, Control Panel for Twitter. Check it out, everyone. And it's free. It works until they kill it, but for now, it's working good. So
nice.
That's my recess today.
People, a lot of people hating Twitter out here these days.
Yeah, I mean. Yeah.
What's there to hate? I don't understand what people are so upset about.
Has the experience changed for you?
Yes.
How so?
It hasn't for me. I don't.
It's so many people that I don't follow.
I was talking to Shane Murphy about this yesterday, and it really is on you, I think, as the user to,
Agreed.
Curate your stream, to mute the right people, to, add alerts to the right people, things like that. And like your experience is completely how you treat it with any social media. But
great point, Pat. Bunch of big babies out here.
All right, call me a
Yeah,
baby.
I don't understand. If you don't like someone, you block them. It's not a big deal. It's a great way to get, I push some buttons. I do that on purpose so that we can get feedback that we use for sentiment. Like I've been at this for 15 years. Wow, that's crazy. I've been on this platform for over 15 years. It's pretty insane.
I joined in March of 09.
I still get a ton of value from it.
Yeah, that's right, Rachel. Howard has talked a lot about filter failure, so that's ironic.
Yeah.
Filter failure.
All right.
That's a good term for it.
That is our show for the day. Hey, we did have a question in the chat. Do you guys take requests? Sometimes we do, but if you want to drop us a request, what you really should do is watch our show Chart Request Live, which airs every Tuesday and Thursday at 1 o'clock Eastern Time on this channel. Can we please bring up the calendar so you can see the pretty calendar that we made for that? If not, that's okay, but I know we have it somewhere. So stay tuned for that, 1 o'clock Eastern. That is our only other show for the day. Thanks to our guest today, Ed Clissold. Thanks to Pat. Thanks to Kimmy. Thanks to all of you. Hey, drop us a like. That'd be great. Subscribe. Tell your friends. Do all that good stuff. And see you guys later. Have a good one. Go make some money.
Go get them, Tigers.
Have a good day.
Run it. I can't take no